Hi everyone, welcome again to this channel Proving the Markets. I'm going to show you how to use lower time frame strategies and execute quality entries in the lower time frames whilst maintaining bias from the higher time frames. I will be using two cryptocurrency pairs to execute this. If you're new to this channel, subscribe. Now let's get into the chart. Now we'll be starting out with Bitcoin. Now for Bitcoin, the first thing we'll do is we'll come over to the monthly time frame first of all, because the monthly time frame is the overall bias to know the direction of the trend. So simply the monthly time frame says that we are bullish. Fine and good, because we've got a trend line still in place right about here, although it looks as though that this trend line has been broken. So that's why it's important to come over to the monthly time frame to tell exactly what the trend is doing. And I can see clearly that the major trend line on the monthly time frame on BTC has been broken right about here. That is good. This is useful information. This is good so that you can know how to position your trades in the lower time frame for BTC. Now, the next thing we'll do is to go over to the weekly time frame. The weekly time frame is essentially to check for any chart patterns. So the monthly time frame tells you the trend. The weekly time frame tells you how to position for the trend on the monthly time frame by simply looking at market structure and drawing your levels. So market structure in terms of your chart patterns, whether you've got any chart patterns that is going in line with what the monthly time frame is saying. Now, we've seen here now that we don't have any chart pattern as such, so let's just go out and plot out our key levels. So we're right here and we've plotted out our levels nicely, and we're on the daily time frame. Now, on the daily time frame, right from this point when the overall trend line was broken, how can we capitalize on the move to the downside on Bitcoin? I'll show you how to do that in a simple way. The first step is to map out your daily level. So I'm going to come out and map out the daily level because we're on the daily time frame, and I can see that we've got reactions right about here. And our daily level has been plotted down nicely. What do? Simply, we follow the break and test strategy. That simply means that we wait for price action, then we wait for market structure, then we wait for commitment, and eventually actual confirmation. So the commitment in this case is that there was a break of the monthly trend line, and then we wait for confirmation. Confirmation simply means we want to make sure that it's not going to be a fake out, so a fake breakout. Now, the only way to confirm that is to actually wait for a retest. Now, that's what this daily level is going to tell us right about now, because this daily level, which is this level right about here, will tell us when the market is actually ready to go down. Now, having plotted that, after we broke this level right about here, so I'm just going to use this simulation too. So after we broke this level here, you can see that we played around this level a bit. We played around it a bit. We continue playing and messing with the daily level. That's to show that the market is not yet ready. In order to catch a very big move, you should wait for the market to actually commit in this manner. So after the market did this all this while and eventually came here and faked out traders and eventually recommitted back on the daily time frame. So the recommitment means it will now break below your intended level and hold. So in this case now, this is where this market committed right about here. So what next do? We go down to the 4-hour time frame, which is the lower time frame, to see exactly how to capitalize on this. Now, this is where the market was. Now, after this break below this level, do we get into a trade? No, because when I say that we'll have a wider stop loss if we only just take trades on the break, what I mean is that we'll put our stop loss above the last recent high, and then imagine this stop loss alone is a lot of pips. Let's check out how huge it is. How much of the market are you going to commit? So if you're trying to commit like this is not enough. I mean, because the stop loss is just huge. That's why I said you should always wait for a retest. So after we've broken here, because we've had the confirmation on the daily has committed back below the daily zone. All I need is a retest of that daily zone in the lower time frames. So we're in the 4-hour time frame. So I'll just simply scale quickly over to the 1-hour time frame to see exactly how this market actually recommitted to that level. Now you can see that after we broke below here, we touched it right about here, but this is not an entry signal for us. We don't take entry signals like that. We actually wait for the market to play out a chart pattern and fail. So I see a chart pattern right about here, with this being the left shoulder, and this is being the head, and this is being the right shoulder. So I'm able to spot these chart patterns quickly because I have experience in this. So simply what it means is that this is the left shoulder. So any of these two can be the left shoulder. This is the left shoulder. Then we've got a head right about here. And then simply we have a right shoulder here. So that would then mean that that exact level or a level just close to it will now serve as the neckline, and I'm going to paint this orange. Now, after we have spotted this, so an inverse head and shoulder is a reversal pattern, so it reverses the trends to the upside. Now, after we saw that we didn't break above this level, and this was the last area where the market came to actually and held, simply because we're in the 1 hour time frame, it becomes easy to execute this trade. And I'm going to show you a trick to actually do that. Now, the trick is to have a trend line right about there and wait for the trend line to be taken off. Now, after the trend line is taken off, which happened here, you simply get into your trade with a better risk management profile. So this stop loss is better compared with what you are aiming at. And we are preparing this trade with this stop loss. So our stop loss just goes above the level. And then where do we aim for? Simply, I'll show you how to scale up this. So we took this trade on the 1 hour, and where are we aiming for? So back to the daily level. So this is the first rejection point on the daily level. So I'm just going to put a bar right there. So that's the first point we take profit. And then the next take profit will be the next monthly zone right about here. I'll just simply scale back to the 1 hour to show you how this trade was simply executed on the 1 hour time frame. So this is a trade simulation. We'll put our first take profit here, which you can see that the market did respectfully come there nicely and smash it. So this is a risk reward of almost 1:3. And then we now take some profits here and allow the rest of the trades to keep on running. So overall, we took this trade all the way to the downside, giving you a better risk reward of 1:5. Now you can see that we got this trade smashed right about here. And one thing you should know that, guys, apart from this overall trade hitting our take profit, we're still able to add more positions using the same logic right about here. So we added more positions right about here. And how do we do that? I'll show you how do we do that. So the same logic applies. And you can see here that we have an inverse head and shoulder still forming right about here, with this being the left shoulder and then this being the head. You can see that while I'm doing this, you can start training your eyes to actually spot these chart patterns quickly. And then this is the right shoulder right about here. So this is the left shoulder, this is the head, and the right shoulder. And since this is an inverse head and shoulder on the 1 hour time frame, simple, it's supposed to have a neckline. So this is the neckline right about here. Now this chart pattern is supposed to reverse this trend that has been all the way bearish so far, to reverse this trend to the upside. And you can see that it didn't do that. Now, after it failed, how will you know that this chart pattern has failed? Quickly, you can see that it failed here by having several reactions here. So this is the first reaction, this is the second reaction, this is the third reaction, and then this is the fourth reaction, and an eventual fifth reaction. So we have 5 reactions here, and the market failed to break this level. Now, after all that happened, simple, we draw a trend line right about here. Now, we'll now scale lower as well to the 30 minutes to see exactly how to capitalize on that trade. So you can see here now we're on the 30 minutes time frame. This had to actually scale from higher time frames to lower time frames to take entries. Now in the 30 minute time frame, we've had this counter trend line drawn right about here, and we waited for the level to be taken off. Now after the level was taken off here, we got into a trade. Our stop loss just comes above the level. And where are we aiming to, guys? We are aiming to the overall take profit target, and that's the monthly target. So I'm just going to take this trade all the way down here. Now this gives us a better risk reward than the former one we got, and also a second position to it. So immediately this trade got in, we are able to take a 1:4 on this trade. So this is a 1:4 on this trade on the lower time frames, and that's how we're able to smash Bitcoin to the downside using lower time frame strategies and price action. Now let's get to Ethereum. So this is Ethereum. The first thing you do on the monthly time frame is to see exactly where the trend is going. So on the monthly time frame, we can see that we had a trend line right about here. So this market was going to the upside right about here. It broke this level eventually, but the market failed to sustain above this level because all I can see is that in hindsight, there was a level 2 right about here. So this also now began to act like a support level as well. So after it broke it and got to this level now became its support level. So I'm just going to draw it right about here so you see what I mean. So this level now eventually became a support level. And that's why the market actually did not give a real break below this level. And it stalled and ranged right about here and continued to move to the upside. Actually, we also had trades to take this trade back to the upside because overall it's bullish, and after it failed to break below, it just simply means that we should take more trades to the upside. And how do you execute these trades to the upside continuously? So simple. After this level failed here to break, we expected the market to go back to the upside and recommit. After it went back to the upside, we'll go over to the daily time frames to see exactly how we got into this trade. Now you can see that on the daily time frame, you see on that level, we had a chart pattern, something that looks like a head and shoulder or a triple bottom. So they're still about the same thing because basically they're all ranging markets. So chart patterns are ranges. So after we had these tray bottoms, simply we have the neckline here. After we've identified that the neckline is here, we'll just wait for this neckline to be taken off and retested. So we don't enter on the breaks like I told you. So I'm just going to use an actual level, the daily level, to show that right there. Now the daily level, so after we break above, we go over to the 4 hour time frames to see how we actually get into this trade. So this is the break and this is the retest. Now this is the wave it formed while having the retest. Now after this broke below this level, this whole setup got invalidated because we've broken below the neckline. So after it broke below here, I still waited for a chart pattern to form again. Now this is the left shoulder, this is the head, And then this exactly, if you look at it the hand side, it also looks like a right shoulder. Now after we broke above this level, we now eventually created a higher low there. So you can see now this higher low is higher than these two lows right about here. So after a higher low was created, all I waited was for a breakout again above this level. Now after we did breakout above this level, you can now see now the market is now tuned to continue to move to the upside. You can take trades from here. Here is also okay to take trades from here, but watch exactly how I'll be able to enter a better trade, because if I take a trade from here, my stop loss will have to be below the last recent high. And this is a daily time frame, unless you're aiming here, so which is still good. That's why I said some setups are actually good to take. This is a 1:3 trade. It's actually a good trade to take. 1:3 trade is very, very marvelous. So you can actually trade trades from here. In hindsight, I can take this type of trade, but I will wait for a scenario where the market commits. You guys know how I love to trade. I want the market to still commit above that level that it invalidated in the first place, and then give us a retest. So in this case, so even if you missed out on this trade, so you wait for this commitment here, and then they retest. So after you got retested this level right about here, so this is the point where I want to take a trade from. Now you can choose to take a trade based off this, because if you look at these guys, this actually looks like a candlestick reversal pattern. So what's this candlestick reversal pattern? This clearly is a morning star pattern. Now a morning star pattern has formed here on the daily time frame, so you can still take trades here based off candlestick patterns that are concrete. You can still take trades here, and then where are you aiming to? So you go over to the weekly time frame, so you see exactly where you are aiming to on the higher time frames, because the key is to take trades on the lower time frames and aim to the higher time frames. So you can see that we're coming back to this level right around here, and we're going to take profits along the way. So the next place we'll take profit, it will be eventually it will be here, and then all the way up. So we'll now go over to the daily time frame where that trade was actually taken based off the morning star pattern. So you can see now that this is the daily time frame, and then this is the trade. Simple. We now aim to the first target, which is here. Now this is a risk reward of 1:17. Understand? So when you take trades like this and you see the potential of these trades, that's why I tell you I usually risk small and aim for the highest. Now because of I'm using concrete price action driven concepts to actually trade this, that's why I'm not scared of taking these trades, and I'm profiting from a massive risk reward on this type of trade. So this alone is 1:17. So this just means that if you're risking $1,000 in this trade, the return on this trade will be almost 18,000 on this trade for just what the first take profit. And this is how we were able to line up eventually. It took a while, obviously, but the market got there to the first take profit level. So the first take profit level was hit here. After that, we closed out most of our trades because we have profited hugely from this move to the upside, and we closed out a lot of our trades because of this move right about here. So this move, if you don't close out your trade, this move is going to eat deep into your profits, and to now make sense of all the progress you've made. So that's how to actually take trade. So after you have hit your first take profit, simply you just move your stop loss to break even. So in this case, we took this our stop loss right about here, we moved it to break even, and we also use trailing stops along the way to hold on to our profits, and that's how we're able to take this. Now after we hit profit right about here and we stopped out, I had to readjust to see exactly what the market is doing, to know whether we are still going to the upside or not. So we can see the market got to this level on the monthly time frame. We'll just simply scale over to the weekly time frame to see actually what's happening there. So this now in hindsight became a monthly level because we had a lot of reactions right about here. So after the market tested this level 1, 2, 3, 4, the fifth time when it did like it wanted to break above it, it did not break above it and actually came below it. So simple, we still do the same trick. We go over to the daily time frame to see exactly how to get into a trade following the rejection right about here. So we just draw our counter trend line like so, and then this market broke below it. Now do we enter in this trade? No, we don't enter in this trade because your stop loss will be wide. You wait for a retest. So the same logic that applied here, simple. Now we see that we've got a level here and here and here and here. So we've got a level there, and we're just going to replace it with what? A daily zone. So we'll just take our zoning tool and plot out the level nicely. So after all that, what else do we do? Simple, we now go over to the 4-hour time frame to see exactly how we enter this trade using what? Price action. So if you look now on the 4-hour time frame, we actually have a trend line right about here. So this trend line is going to be what will save us from entering into premature breaks. So you can see that after we broke above, we tested it, but we didn't get a good entry here. So once we don't get in here because of no confirmation of a candlestick pattern to actually tell us that this market is ready to move, we wait for the market to give us some reaction somewhere right around here. Now, the only way to do that is to look at this in hindsight as a pattern. So this is a chart pattern right about here. And once we go over to the 1-hour time frame, you will see that it's actually a chart pattern that was formed right about there. You can see that it's not the cleanest of chart patterns, and you actually have options. So this is the first option, with this being the left shoulder, this being the head, and then this being the right shoulder. Now it just then means that this chart pattern has what? A neckline. So this is the neckline right about here. Now, so I'm just going to color this orange. Now, you can see that after all this, the chart pattern form, we actually broke the neckline here. We waited for a retest. So we're waiting for a retest here. We didn't get a retest because the market actually blew past this level. That's fine. All we do is to wait for the market to come back below this level. Did it do that? Yes, the market did that. It broke below this level again right about here. Now, we are having confirmations on the 1 hour stemming from the bias on the higher time frames that this market actually wants to go. Now, we've had a chart pattern here. So this is the first one. This is actually another chart pattern if you take a look at it closely, because this is also a left shoulder, the head, the right shoulder. Now, this is the second chart pattern which you saw here. So why I didn't want to enter the trade here after a break below its neckline, because if you now take a look at this now is the neckline of this trade. Why I wouldn't want to enter here is because the break was too massive and we were trading below this level. So this level is contentious. So by the time we did break below this level right about here, this is when you can actually enter this trade. Now I'll show you how to actually position for this trade. You get in here quickly. Now, where do you put your stop loss? I'm going to show you where you put your stop loss. You take your stop loss right about here, because we are on the 1 hour time frame. You take your stop loss here. So even if it looks massive, all we are aiming for is the next take profit level on the higher time frames. Now we've gotten confirmations here, a hold and shoulder that initially failed and then the market came down to trade below it, and it also created another head and shoulder before it actually broke the neckline of the previous one. So after we broke this one, it means the market was actually ready to go. So our stop loss was there. So go over to the daily time frame to see where we are aiming for. So we would first of all take the touches on the previous touch of the trend line. So this is the previous touch. So this was the last touch it made here. So definitely market is going to respect that, and we'll have a level there. So this is the first, this is how I take trades. So you have a level right about here, and then overall, after it's broken this, which it did right about here, the next take profit will be this monthly zone. So if you go over to the 1 hour time from where you took this entry, you will see what the risk reward on this trading profile was. So this was the risk reward on this trade. So this was 1:4. Awesome, marvelous, and we hit the TP right about here, and then we took away some profits here, and we are allowing the rest of the profits to run. Now you've seen the way BTC has positioned, and you're seeing that I'm using chart patterns in the lower time frames, even in the 1 hour time frames, to actually take these trades, all stemming from a bias on the higher time frames. Now, using the same logic, you'll find out that there is actually a trading position to enter on this. So when you now look at here, we see that on the lower time frame, we're still having a chart pattern here, with that being the left shoulder, and then this being the head, and any of these essentially, it can be any of these. So I'll just use this, with this being the right shoulder as well. Now it has a neckline, which is that same level we took our take profits. So which is this same level right about here, with this being the neckline. Now, the market has tested here several times. It just shows us that the market does not really want to break that level, and then the trade is already going to the downside. So this is how to actually position for more and more trades to the downside. So if you use the same logic, we will have more entry opportunities. First for a break of this trend line right about here, and then wait for more confirmations, because the market has started to go back to retest that same level. We'll wait for more confirmations, and we'll continue driving this trade to the downside. So that's how to exactly execute trades and make a lot of money using chart patterns the right way. If this video gave you insight, give me a thumbs up, drop your comments down below. And if you want to learn how to actually trade properly by using this multi-time frame analytical process, I've got a free masterclass that will show you exactly how to do this the right way. The link to the masterclass is down below. Now, if you want to see exactly how I trade, watch this video right here.